Canadian retail spending was up 1.5% in June. Let's go through the Statistics Canada data with Michael Davenport, senior economist at Oxford Economics. Thanks for joining us.
Yeah, thanks for having me.
So sales up 1.5% in June, month over month. Would you characterize this as a strong retail number?
Yes, I mean, this was an unequivocally strong retail sales report. So what we saw was essentially, as you mentioned, a 1.5% increase in nominal sales. Sales volumes actually increased by the same amount. And we saw increases in all 9 subsectors that StatsCan highlights in its report. So unequivocally a strong report for the month of June. However, when you look through that, what we see is actually a softening underlying trend in retail spending that we think will continue through the second half of this year.
Okay, I want to talk about that in a moment, but this came off a 1.1% decline in May. So what do you think changed between May and June?
Well, it's a great question. I think what might be at play is just a little bit of volatility in the monthly numbers. If you look relative to May, we saw bounce backs in a couple of the sectors that drove the May decline, but not all of them. So we saw a rebound in food and beverage retail sales, as well as sales at gasoline stations. So those really drove a lot of the bounce back that we saw between May and June. However, if we go back to May, one of the biggest components driving the May decline was auto sales and receipts at motor vehicles and parts dealers. And that didn't really rebound that much in June. So if we look at retail sales volumes at motor vehicles and parts dealers, those only ticked up about 0.3% in June relative to the month of May.
Okay, you mentioned an underlying trend that seems to be soft. Can you expand a bit more on what you're seeing?
Yeah, absolutely. So as you mentioned, the June increase followed a similar sized decline in May. So if we look at the level of retail sales volumes in June, the increase really got us back to the level that we were at in April. While the June report was strong, again, in levels terms, it didn't bring retail sales volumes to a much higher level than what we had already seen earlier this year. Now, the other thing I would mention is that if you cut through the monthly volatility that we've seen in retail trade over the last few months, and you look at the underlying trend growth, overall retail sales volumes are up only 0.2% in June relative to where they were in December of 2024. In addition to that, StatsCan's flash estimate, its early call on what the July retail sales numbers will show, suggests that nominal retail sales actually pulled back 0.8% month over month. So StatsCan is saying that the economy essentially gave back about half of the rebound in June in July. And we think, again, that that's a sign of weakening underlying momentum as the economy moves into the third quarter. Ultimately, we think that will continue and that consumer spending momentum will likely continue to wane in the second half of this year as job losses from the trade war build, and that weighs on household disposable income. We also think that the pass-through of Canadian counter tariffs to consumer prices will be another factor that accelerates later this year as temporary remissions for Canadian counter tariffs expire in mid-October. We think that's going to be a factor that pushes retail and consumer prices higher, leads to a little bit higher inflation in the second half of this year. That'll be another factor that causes consumers to sort of rein in their spending a little bit as we move forward.
With Mark Carney announcing today that things that are CUSMA compliant will again not face a tariff, and that'll start September 1st, will that also provide a further break for consumers, you think, faster than expected?
Absolutely. That is definitely a positive development from a consumer perspective. Essentially, what it means is that Canadian firms will no longer be paying tariffs on the same amount of goods that they're bringing into the country. This will limit the increase in costs for Canadian firms, and it will also limit the pass-through of Canadian counter tariffs to consumer prices like I was just talking about. So that's obviously a very recent development, something that we're going to be building into our forecast and really looking at in detail over the next couple of weeks here. But on its face today, it is definitely a positive development for the Canadian consumer that will sort of limit the hit from the trade war in the second half of this year.
I also wanted to ask you about food prices. Spending on food and beverages being higher in June, and food prices we know have trended higher generally for quite some time. So is it unusual to see a surge in spending in food and beverages, all things considered?
It's a great question. I think all things considered, if we look at the underlying trend in food and beverage spending, it's not incredibly strong. Again, I think the big number that we saw, the big increase from June relative to May, largely reflected of a bit of a bounce back from a decline in the previous month. And overall, we haven't seen food prices over the last little while rise all that quickly. Overall, I think CPI inflation for the month of July, we just got those numbers last week, showed food inflation around 3.3% year over year. That's not too high relative to some of the major increases that we had seen, much higher levels of inflation for food products we had seen going back a couple of years ago. And so we've also not seen a significant impact of tariffs on aggregate food costs and food price inflation in Canada yet as well. Again, that's something that we think is going to come through in the second half of the year as Canadian counter tariffs are passed on to consumers and those sort of temporary remissions start to expire in October. But today's announcement will certainly change the picture a little bit on that, and that's something we're going to be digging into over the next couple of weeks.
All right, Michael Davenport, good to have you. Michael, senior economist at Oxford Economics. Thanks for that.